Hello everyone, welcome back to my channel. Today in this video I will describe about journal entry. The topics is how to pass journal entries with examples. In previous my YouTube channel, a video I explained the golden rules of accounts in details. In this video I will quickly revise them to help you understand the journal entry. So let's get started. Golden rules of account, that is rule of debit and credit. In accounting, golden rules are three types. One is personal account, second real account, and third is nominal account. In personal account, the person receiver is debit and giver is credit. In real account, what comes in, this is debit, and what goes out, this is credit. And nominal account, all expense and losses are debit and all income and gains are credit. These are golden rules of accounts. Now I will explain the practical example of journal entries. 1st January 2026, Mr. X started business with cash 50,000. Second entry is 1st January 2026, purchase furniture for cash 10,000. Third entry, 2nd January 2026, paid rent 3,000. And last entry is 2nd January 2026, sold goods for cash 15,000. These four entries I will explain details. First entry, Mr. X started business with cash 50,000 taka. This transaction affects two accounts. One is cash account and another is capital account. 50,000 taka cash coming in business, and Mr. X is a person that invest in the business taka 50,000. Cash coming into the business, cash increase, that is asset increase. Mr. X invest in the business, so capital increase, that is liability increase. Capital is stated as liability of the business. Mr. X is a personal account and cash 50,000 is a real account. In accounting golden rules, Mr. X is a person given to the business taka 50,000. So Mr. X is a giver, that is Mr. X personal account. So it will be credit, that is credit. And cash, that means asset increase. So debit, what comes in, cash is comes in business, so cash increase, this will be debit. Now journal entry will be cash account debit 50,000 taka to Mr. X is capital account credit 50,000 taka. Second transaction, purchase furniture for cash taka 10,000. This transaction affects two accounts. One, purchase furniture, and second, cash taka 10,000. Furniture purchase, so furniture increase, that is asset increase. This is real account. In accounting rules, real account, what comes in, that is furniture comes, so asset increase. So furniture account will be debit 10,000. And next, cash account, cash goes out, asset decrease. This is real account. What goes out? Cash goes out. So cash account is credit. Journal entry will be to cash account credit 10,000 taka. Now we can say furniture account debit 10,000 to cash account credit 10,000. This transaction is paid rent taka 3,000. Here affects two accounts. One is rent, that is rent expenses, and another is cash 3,000, cash account. When cash 3,000 taka paid, then cash goes out, that is asset decrease. Asset decrease means real account, that is credit. In golden rules, real account, when anything goes out, this will be credit. Here cash goes out, so cash is credit. Transaction will be cash account credit 3,000 and expense increase. This is nominal account. In nominal account, when expense increase or loss increase, this will be debit account. Here rent paid, that is expense increase, so rent account debit 3,000 taka. Now finally we can say journal entry rent account debit 3,000 taka to cash account credit 3,000 taka. Sold goods for cash taka 15,000. This transaction affects two main things. One is goods sold and another cash is coming. When cash comes into the business, this will be asset increase, that is real account, that means debit. In golden rule of account, real account, what comes in, this will be debit. Here cash comes, so cash increase, that is asset increase. Transaction will be cash account debit 15,000 taka. And another is goods sold, that is goods go out, goods decrease. This is nominal account, that means credit. In nominal account, when expense or loss increase, this will be debit, and when income and gain increase, this will be credit. Here goods sold, so income increase, that means sales will be credit account, so transaction to sales account credit 15,000 taka. Now finally we can say cash account debit 15,000 taka to sales account credit 15,000 taka. So this is all about practical example of journal entries. Viewers, if this video helped you, please like, share and subscribe. Thank you for watching.